Good morning and welcome to first of video's series of financial forum we plan to have throughout 2022 on navigating risks in this year of the tiger. For those of you who celebrated the Asian Lunar New Year's a few weeks ago, Happy New Year to you. I wish you a prosperous and a safe year. Before we kick off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you're all automatically muted, but we will be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we'll follow up with you after the webinar concludes. If you're experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded and all registrants will receive a follow-up email containing the slides, a link to the recording and the speaker contact details for all of us. Okay, my name is Simon Yu, and I will be your facilitator for today's session. I'm a partner in BDO Sydney's Risk Advisory Services practice and focus on delivering internal audit, internal control, and compliance advisory services for our financial institution clients. Prior to joining BDO last year, I have spent most of my 29-year career in Big Four accounting firms and also a few years in the financial services industry. As the head of internal audit for a general insurer and CRO for the group of its financial services entities. Recently at EY, I have had a focus on serving Asian inbound clients. In the FS sector, in particular, I have assisted clients with obtaining APRA approval for foreign ADI branch setup and with APRA compliance, such as APS 310 external audits and CPS 220 risk management framework reviews. Before we get into the presentations, please allow me to give a quick introduction of BDO. BDO is a trusted advisor to clients seeking audit, tax, and advisory services. As one of the world's leading audit and accounting organizations, BDO's global organization extends across 167 countries and territories, with nearly 100,000 people working out of 1,728 offices. We're all working towards one goal, to provide our clients with exceptional service. From a global beginning in 1963 with 5 original member firms in the UK, Germany, the Netherlands, the USA, and Canada, BDO in Australia was established as an association of firms in 1975, where we are one of the country's largest association of independently owned accounting practices with offices in Adelaide, Brisbane, Cairns, Darwin, Hobart, Melbourne, Perth, Sydney, and the Sunshine Coast. The global fee income of all BDO firms, including the members of their exclusive alliances, was US $11.8 billion as of 30 September 2021. When you compare that to one of our Big Four competitors, which had a global revenue of $30 billion last year, you would know that we are truly a global firm with a credible alternative to the Big Four. Now to today's proceedings. We have assembled a group of very experienced risk advisory partners who I feel very fortunate and proud to be associated with. Across this team, we collectively have decades of extensive experience in providing cyber, forensic, AML, internal audit services to a broad range of clients, but in particular to our financial services clients, where BDO Sydney Risk Advisory Practice has a primary focus on. We'll have 4 speakers today. Each presentation will be between 8 to 10 minutes. For sake of keeping today's webinar strictly to 1 hour, we'll go through all 4 presentations and leave about 15 to 20 minutes at the end. For any questions from the audience, and hopefully some robust panel discussion between presenters and the audience, which I'll be moderating. Okay, to start us off, please allow me to introduce Ross Widows. Ross leads a cyber practice in Sydney and has over 17 years experience working operationally within industry and at professional services firms in Europe, the Middle East, and Australia. Ross has supported some of Australia's most successful established organizations, including the Big Four banks and startups, in achieving confidence in their cyber strategies, thus allowing them to focus on their business goals with confidence. Through this, he has developed a strong network of contacts at the board and senior level across the cybersecurity space, as well as more broadly across multiple industry sectors. Over to you, Ross.
Thanks, Simon, and hi everyone. It's great to be able to talk to you today. My name's Ross and I lead the cyber business, as Simon said, and I'd like to talk to you today a little bit about cyber resiliency, what that means to me, and how we think about cyber resiliency when preparing for a cybersecurity incident. So cyber resiliency has been around a little while now from a terminology perspective, and probably goes hand in hand with words like operational resiliency and business resiliency. But like a lot of terminology we use in cybersecurity, it's often subject to much debate around what that means to people. So for me, cyber resiliency really means accepting the fact that cyber attacks and cyber incidents are going to happen. So you may experience a large-scale incident, ransomware, that may lead to operational downtime, you may lose data, lots of press, potentially fines, really, really terrible situation. Might be something, a medium-rated incident that knocks you out for a couple of days. It could be insignificant, it could be significant. Or you might experience a small-scale incident, or you may actually not have experienced an incident at all yet, or you may not know that you've experienced an incident. But they are going to happen. So what are we doing to kind of lower that risk? So what are we doing to lower the risk of an incident happening? What are we doing to lower the risk of us being able to kick those individuals? What are we doing to be able to identify those attacks when they happen? And what are we doing to be able to kick people out of those environments quite quickly when they do happen? Because even in the face of a cybersecurity incident, you still want to be able to be operational. You still want to be able to run your business. You don't want to have that kind of data loss. A lot of executives typically say to me during a cyber incident, what can we do now? Well, unfortunately, there's probably not a lot they can do now. They need to let their teams and the third parties who are supporting them get on with the jobs that they need to do. The things that you do in the months and years before the attack happens are really, really critical. So we really need to start with a bit of a plan. So do we have the right mindset? Are we happy to accept that cybersecurity incidents happen and are part of life? Do we have the right buy-in from the board and from our executive? Do we have the right mindset in our cyber team, in our IT team, in our audit teams, in our financial teams? There's a lot of financial folk on the line today, and obviously we as cyber professionals need to convince you to give us some money to help with these cyber attacks. So do we have that mindset there? Do we have the right technical environment? There's lots of great solutions out there now that can help you defend a cyber attack and protect from a cyber attack. And there's lots of companies that can do that for you as well. But if these things have been poorly designed, poorly implemented, and are not fit for purpose, they're not going to help you. Do we do cyber hygiene right? And what's our legacy infrastructure look like? Because I'll come on to the controls later in the hygiene piece, which is really important. But the legacy infrastructure now, or technical debt, which is another phrase that we use, all our servers and infrastructure that's unloved and we don't think about anymore and is no longer patched or no longer updated could be a really, really easy avenue for attackers to get into our organization, and then that will allow them to get to the more juicy stuff they actually want and would cost us time and money to replace. What's the cost of an attacker? What's the cost of an attack to an attacker to attack us? And that's a Microsoft approach where they say, how much would it actually cost for them to attack us? Do we have really sophisticated infrastructure, and would it be really difficult? Do we think our data is actually already available somewhere so they could easily purchase it for a low fee and kind of hold us to ransom? So what does that look like? And then, because it can happen, how confident are we that we can identify them and keep them out of our network? So there's lots to think about there, and they're really hard, really, really difficult questions to answer. So what I like to do with my clients, with my new clients, is to start with 6 questions to kind of build that base. So the first question is, what is it you're actually trying to protect? Systems, data, people, infrastructure, having a real clear understanding of what that is. The next question is, where is it? Because these days, the traditional perimeter no longer exists. All your critical stuff will likely be either managed or accessed by other people, cloud environments, third-party applications, so much mobile working now, laptops, mobile devices, interconnected things through the Internet of Things technology. So where actually is it? Who has access to it? Do you know who has access to it? Do you know why they have access to it? Do you regularly review your access to make sure that the right users are the ones who can access it? Because the malicious insider now is equally as risky as the external attacker as well. Do you have an idea of who actually will be attacking you and who's targeting you? Some of my clients legitimately have people who will target them because they're large clients. Other people, they may not be an actual target, but they may be a target by default because someone's going after a third party that provides services to them. There's a very well publicized event last year. A company called SolarWinds got attacked. And through that, the attacker was able then to access lots of other different organizations. They weren't necessarily going after the organizations, but it was an easy in because they got into the third party. Next question is, what controls do you have in place, and are they the right controls? So do you have controls in place? Do the third parties have controls in place? How do you measure and monitor those controls? Who operates those controls, you or a third party? And that's really important because as technology advances and there's more and more opportunities to use cloud computing and things like that, you'll often hear terms in the news like Amazon S3 bucket exposed to the internet. And what that means realistically is something's been poorly designed, or somebody is responsible for something and they don't actually know why. A lot of clients will say, well, actually, we outsource this to a third party, but the third party is just providing a bare bones service, not the security around it. Next question is, do you test these controls? Do you test them internally? Do you get other people to come in and look at them? Do your third parties test their controls? Do they give you access to the reports? What does that look like? Because if you don't test them, you don't know how they're operating. And then finally, I'd like to ask, do you train your employees? Now, employees are often referred to as the kind of weak link in the security chain, which I think is true, but also probably a little bit unfair. I think what you need to do is when you're designing your security, you need to not allow the end user to make trade-offs and make decisions, but design security so they can operate within the confines of that. So once you've done that, you've got a really good understanding of your environment, what you're trying to protect, different third parties that you might use, the controls, and you can start to have a baseline of where you are and where you want to be. So you can start to make small improvements, and you can think about what level of security control operation you want to have. Not everybody will need or want a gold standard of security, and obviously some people can outsource a lot of that as well, but again, it's how do you get the comfort that it's been done right? Because security is often like the sky is falling in, and I don't think that's necessarily true. It's all about making small changes over time. I can't get up tomorrow and enter an Ironman, but I can make small changes to get there in 6 months or 18 months or whatever that is, and I think that the same can be applied with security. And once you've done that, the next thing is to simulate what an attack would look like. And I don't mean testing your controls like we've talked about. I mean getting key people in a room and really doing a desktop simulation of what you would do and the actions you would take in a crisis event, effectively. We do a lot of work with clients who have got really good people and policies and controls and all the good stuff. But when you get in the room and you start playing out what would actually happen, it's clear that there are kind of holes in the process and not everyone knows what to do. There's a famous quote, everyone's got a plan until you get punched in the face. That's definitely true when it comes to a cybersecurity incident. And then the final thing I'll kind of leave you with here is a lot of this resiliency has been driven by regulators. So we have lots of cyber regulation and data privacy regulation now worldwide. Here in Australia, we have APRA CPS 234, which applies to all regulated entities. APRA have recently taken that a step further and are asking the regulated entities to have an independent assessment of how they comply with that security standard. There is the Security of Critical Infrastructure Act, which is before Parliament for its final passing, and that will really be a big impact because initially the Security of Critical Infrastructure Act focused on energy and utilities and whatnot, but now the scope is much broader and it also includes retail, financial services, data processors and others. So there's a lot to think about there. And then we also have from the government, we have the ransomware action plan. Whilst that is not legal yet, it is starting to think about, do we need to make it mandatory that people report if they paid a ransomware, or they're not allowed to pay a ransomware and things like that. So that's an interesting one. And typically all these regulations require reporting on incidents, reporting on control breaches. So I think that's why it's really, really important to have all this solid foundation in place. So for me, it's what are we doing to lower the risk? What are we doing to identify the attack when it happens? And what are we doing to kick them out of the network as quickly as we can? That's cyber resiliency for me. Thank you. I'll hand back to Simon.
Thanks, Ross. Yes, those 6 questions were very useful. For the audience, if you have any questions relating to Ross's presentation, we'll have a Q&A session at the end, so please note them down and save them for later. We'll now move on to Adam Sims, our partner in forensic services. Just a quick introduction of Adam. Adam is a New South Wales financial crime solicitor and partner at BDO Forensic. Adam has more than 25 years of investigation and financial crime risk management experience, which includes practicing law and working within law enforcement, government agencies, state and commonwealth, private consulting, and financial institutions, banking and insurance. Adam was a member of the Australian Standards Committee, revising AS 8001, and has recently been appointed to the International Standards Organization Committee, creating an ISO standard for internal investigations. Okay, over to you, Adam.
Thank you, Simon. Thank you for the introduction. We have a lot to get through. I've prepared some slides for you so that you can see where all this is coming together. So I'm not going to talk to you about something, anything specific. I'm just trying to bring what's on the horizon in 2022. We have a very busy year in the financial crime space, so it's important for everyone to get their head around what's coming and what might need to be thought about when these laws and procedures and policies and other things come into play. So if we could just go to the next slide, please, Maddie. We've been seeing that Australia is really fertile ground for exploring what is wrong with compliance in financial systems globally. We aren't alone in this issue, of course, but the problem is we are featuring with great consistency. And with what you see on the screen there, it should be ringing alarm bells to owners of any financial crime function within a business that it's kind of sending a ping to the regulators that harder enforcement is needed. And if we learn anything from the Banking Royal Commission, it's also that the regulators are under extreme scrutiny. And as a consequence, the regulatory front is advancing in 2022, and certainly there's a bit of a groundswell in 2021 that we saw a couple of standouts that probably won't be a surprise to those that have to manage this area. Resourcing is a massive issue. There's expertise missing. Work in some cases, we're certainly seeing this, is not being done to the satisfactory standard. We have systems and technology issues, basically businesses not being able to keep up with the adeptness and the manner in which criminals are using technology. We have key processes, as I said earlier, risk assessments, etc., not being undertaken correctly. And then, of course, if you look at the bottom right corner there, regulations and key legislative changes which are coming. If we go to the next slide, please. And the next one. In 2021, so about June, I think it was, we saw the release of the updated standard AS 8001 in relation to fraud and corruption control. Whilst it did come out in June, it really hasn't gained that much traction. There's been a bit said about it. We've certainly seen an uptick in some of the work related to that, but I expect in 2022 and beyond, there will be more traction of the standard. It's a very good guidance document to as to how you should approach fraud and corruption control within a business. But what are some of the changes? And you can see them there. They're not all, of course. We only got 10 minutes, so I'll just go through the main ones. There's a big move in the standard away from the terminology should, and the standard now talks about shall. So as a lawyer, I look to the Acts Interpretation Law, which typically deals with such things, and it says that such change in language becomes mandatory as opposed to something that has to be considered. Now, of course, standards aren't law, so it isn't actually mandatory. It's not legally binding. However, it is advisory in nature, and just be aware that when we start talking with language like that, the chance that these things find themselves in court becomes increased. The nature of fraud control plans, you can see there, the second point. I don't know any on the call or on this webinar that have fraud control plans in place, but typically they sit in a drawer or on a shelf and aren't used. So we've changed the concept of fraud control plans to include something called a fraud and corruption control system. And a system might be a series of interlinking policies and procedures that create the necessary requirements under the standard. And if you want to know more about that, please reach out, because we could run the whole session on that if we needed to. But fraud control plans are out the door. There's updated definitions of fraud and corruption. I won't really go into that. You can look into that if you want. Basically, though, the definition has extended to activity that is not necessarily illegal. So there were some missed opportunities in the previous standard where bad things were happening in business, but it wasn't actually something that could be attributed to fraud or corruption. We have a distinguishing and a harmonisation between this standard and other standards. So there's the anti-bribery management standard. That's an ISO, so an international standard. There are IT standards relating to there's the risk standard, IS 31000, and then there's also the information security management system standard, ISO 27001. Sorry, just trying to think of what that is. So it brings all those into the foray as well. And basically, to meet the AS 8001 standard, you need to adhere to those standards also. Another big ticket item which we see across the board, and I'll talk more about in a minute, is scrutiny of boards. So there's a broader scrutiny on the tone from the top, as we call it, with the standard referencing a breakup really of governing body. So it's talking about the board. Then we talk about top management, which is the C-suite, and then we talk about senior management within the standard. It's really dissecting those levels to attribute roles and responsibilities, and it's placing an emphasis on board ownership. There's also this concept of pressure testing. So if I think about the work we do around fraud risk now, if we go in and do a fraud risk assessment for a business, we might apply some data analytics to that. And really, we're trying to tease out where the vulnerabilities might be in the data available to us. Pressure testing talks about that. So that's what that is in essence. It's now more formalized, but it could also mean something as simple as putting a false invoice into the system to see if it's detected, or to see how far it gets through the control process to see if they're actually working. There's a component of due diligence. So there's actually a requirement now to undertake due diligence on what we call business associates, or what the standard calls business associates. So they are third parties that work for the business. It might be vendors and other interested parties. There is a requirement to do background checks to find out that they are actually bona fide, saying who they are and what they do. And then the whistleblowing card always comes up, and it's a feature, and I'm a firm believer in whistleblowing. I think it's a very effective detection mechanism. There is a new ISO out. If you haven't seen it, do look it up. But this standard talks about whistleblowing, and it adheres to what is in the new ISO. It again emphasises the need for business to have a whistleblowing facility. And then lastly, it talks about such things as immediate action to fraud and corruption, investigation of fraud and corruption. So basically, in a nutshell, there's a whole range of things it talks about there, but it's talking about, you know, what does a business need to do to secure and capture evidence, particularly digital evidence in the new age? How do they triage complaints and then to effectively investigate? Next slide, please. So an extension to AS 8001 reference to boards and senior management legislation is now afoot, which will change the playing field considerably. And again, anyone whose ownership of financial crime function needs to be aware of it. On the back of the Banking Royal Commission, as well as having regards to other reports that have come out more recently, there's been a few of them, but the one that sticks out in my mind is the Australian Law Reform Commission report in 2019, dealing with corporate criminal responsibility, which is on the screen there. We have seen an introduction of a piece of legislation in the Senate now called the Crimes Legislation Amendment Combating Corporate Crime Bill. It hit the Senate in 2019, I think, and it's been sitting there for a while, but I am told with good authority that we are expecting some movement in it in 2022. The reforms associated with this bill are aimed at combating challenges associated with detecting and addressing serious corporate crime, and should not, and I emphasise the should not, be taken lightly. There's an emphasis within the legislation on leadership responsibility, and we talk about this thing called corporate culture. I'm sure you've all heard of it. It's a term that is being used more and more. The standard talks about that as well. And there's a big emphasis on, again, the board, you know, that they need to take ownership, and that really does need to be taken seriously. So anyone that is key to those roles within business should be flagging this with the board. It contemplates criminal sanctions, which is massive, so for the organisation and for individuals. The new legislation also talks about something called deferred prosecution agreements, which currently exist in the UK and the US. And if we look to the UK, probably our legislation will model itself on that more so. It is there to encourage self-reporting by business. So they allow, basically DPAs, as they call them, allow corporations who have engaged in serious corporate crime to negotiate agreements with the prosecution. Rather than being prosecuted, they enter a monitoring type scenario where they give an undertaking to do certain things to rectify, and they can avoid prosecution by doing that. It can be very costly, but again, I think it's moving in the right direction. And on the back of that, the legislation also talks about something called adequate procedures. And again, this is in line with what we see in the UK with the Bribery Act in the UK. Bodies corporate will be automatically liable for bribery-related charges under the new legislation committed by anyone in the business if they do not have what they call adequate procedures. And that is reflected in, as I said, what is occurring in the UK presently. Incidentally, if you're interested in this, and you should be if you manage a financial crime area, there is a very good guidance, and it's in draft, by the Commonwealth Government around what they're talking about with adequate procedures. So to that end, we've also got the recent changes to the whistleblowing laws, which came into effect in 2019. And you know, if you look at all that in summary, the need to investigate complaints, have an avenue for complaints to be made, investigate complaints when they come in, and have an audit trail, have some document trail recording system in place to show what the business has done in relation to that, because that is exactly what regulators are going to be looking for. And I think it's safe to say that the time is right to get culture, company culture right. I'm sure you can see by that slide that how all this is coming together. And it's not for this session, but I am preparing another session where I'll be running separately through, and it'll take probably a better part of an hour to talk more about what organisations need to do to place themselves in a situation where they're creating a centralised, scalable, and proportionate financial crime and compliance program. Very important notion for the future. Next slide, please, Manny.
Adam, I know you've got a few more important slides there, like AML, but
how many minutes?
Would you be able to wrap it up in about a minute or two?
Yeah, sure. So AML, another important area for financial services. We've got the Tranche 2 law coming out I believe it's going to be the end of this year. Not so relevant for financial services, but the gatekeeper, you can see the list there. Gatekeeper services are going to be caught by the Act. So that means another 100,000 entities will come under the auspices of AUSTRAC regulation. Next slide, please, Manny. And then some of the big ticket items that AUSTRAC are looking at the moment, I'll let you read that as I run out of time. As I said, there's so much to cover here. They're the key areas that AUSTRAC are looking at now. So if you want to take a photo of that or screenshot, have a look through that yourself. And of course, if you ever want to talk about any of this, please feel free to reach out.
Okay, thanks, Adam. Yeah, that was really good information. We might just go straight into our next presentation by another forensic partner, but with a slightly different slant, more on cyber. So Quinn. Quinn has more than 16 years of experience in providing forensic accounting and technology services across a range of sectors, including financial services, higher education, and federal and local government bodies. She adopts an entrepreneurial mindset and has a strong focus on maximizing value for clients by getting the right multidisciplinary team for the job. Quinn's main area of expertise is in reconstructing and building chronologies of financial transactions and processes, forensic data analysis, computer cyber forensics, and e-discovery. She is well experienced as a leader of large data and technology work streams on various compliance and regulatory remediation projects. Over to you, Quinn.
Thank you, Simon. So I think Ross and Adam have both done an excellent job at giving an overview of all the regulatory and legislative developments in the areas of cyber, fraud, AML, and financial crime, which essentially is kind of the drivers in a way of some of the work that I do, because once all these laws and regulations fall into place, obviously companies have to comply, and if they don't comply, they tend to get into some form of regulatory trouble or trouble with the law, and that's where I service my clients. So a lot of my time over the last 16 years has been spent in financial services, and that is because globally regulators have had a magnifying glass on that sector. In particular in Australia, it's been ASIC, and of course we all know about the Royal Commission. Now, as I understand it, ASIC has moved on to new leadership, and the focus will be less on the why not litigate sort of school of thought that we've had over the last few years, and it will move to somewhat, hopefully, of a sweet spot between the litigate and the enforceable undertakings that they used to have before the Royal Commission happened. So I think there will be a wider palette of enforcement activity spanning right across from sort of self-management and self-reporting through the less kind of voluntary sort of enforcement there. I think that should be somewhat of a nice breather for financial services. However, having said that, obviously the burden of compliance is not likely to get lighter with the introduction of lots of new legislation. There will always be plenty of work in that space and plenty of risks, compliance risks to address. From an ACCC lens, I think we've seen a leadership role towards big tech, which to a degree is overlapping with financial services. However, does move the global sort of regulatory focus slightly away from just financial services. So I think also from that perspective, maybe the sort of enforcement load or sort of my end of the scale might be shared a bit broader in 2022 and beyond than just by financial services. That's my take on the regulatory landscape at a very, very high scale. Now, obviously, that still leaves us with plenty of regular fraud and cyber incidents that Adam and Ross touched on, because, of course, there's trends, but then there's also just sort of BAU, and there's definitely still lots of people wanting to do the wrong thing, both internal to the organization and external to the organization. Now, we obviously need to take into account the modernization of the technology landscape, and there is a big transition to cloud ongoing in FS, probably a little bit lagging on other sectors, but yeah, sources in the industry tell me that there's now some of the first fintechs that are globally trusted to provide the banking platforms completely in the cloud, and organizations as large as the big four banks in Australia are keenly going on that bandwagon. What that means for tackling incidents and investigating incidents is that there's many more opportunities for us to actually get to data. It offers a lot of options in terms of the data we actually take into scope for our investigations, because there's just that much more available. There's so many more devices, and there's so much more data that people generate. So all of that is handy for my line of work, but it also presents risk at your end. It is like pivotal that organizations keep looking at all those new technologies and the data footprint that they leave behind. This was encapsulated in Rosa's questions, and I think it's essential to ask yourself those questions and answer them from a governance perspective, but then also to realize that that's not where it stops, because in my line of work, I often come across great governance systems and processes, but then the reality, unfortunately, doesn't really match that at the server level. So I do tend to find lots of PII or other forms of sensitive data lying about where they shouldn't be, and people just broadly not aware of how they should have handled the situation, or much like Ross said, the movement to cloud has made who is responsible for security in some occasions a bit less clear, and that like the responsibility has sort of fallen between the cracks, not because anyone consciously did that, but just because there were so many people involved across the spectrum, and therefore, yes, certain key controls that everyone thought would be in place just weren't, and data ended up everywhere, and subsequently it got stolen, exfiltrated, etc. So I think it is absolutely essential to revisit any sort of risk assessments that you might consider standard. Of course, look at new legislation, as mentioned by Ross and Adam. Look at new standards, like the fraud standard, as mentioned by Adam. But then also look at more broadly movements in your technology landscape. And the way that has altered the roles and responsibilities in your organization, and therefore the risk. And maybe if you really want to be best in class, really look at your actual practices. So take it from sort of the design to and the implementation to more sort of the effectiveness lens, and beyond just maybe one or two walkthroughs, but actually look at what you've got out there, map the data. It is potentially coming down the pipe with the changes to the Privacy Act, as foreshadowed by Ross, to make it more in line with other global standards such as GDPR and the CCPA. So I think that is probably my takeaway. And like connecting it all, as was announced in sort of the invitation for this webinar, culture is and was and will always remain one of the biggest drivers of all this. So it is essential that it's in the culture of an organization to want to take care of your customers, to go the extra mile, and to adhere to all those policies and procedures. So even though it sounds a bit soft, it is also a really important preventative measure that shouldn't be forgotten, even in 2022 and beyond. Simon, that's my contribution for today. I'm happy to hand over back to you.
Thank you, Quinn. Some really good takeaways there. So switching gear a little bit. We've had very technical partners who have presented so far. We'll switch gear to Mark, who is more of a broad internal audit and internal control specialist, sort of like me, who will hopefully sort of wrap up today's discussion with a broad brush. Mark is a partner within our Sydney risk advisory practice. Mark has over 26 years experience in delivering risk advisory services for a wide variety of clients in both Australia and the UK, including ASX listed corporates, Commonwealth and state government departments and agencies, bank and non-bank ADIs, general and private health insurers, payment system providers, health and aged care providers, not-for-profits, local councils and universities. He also works closely with his clients to help them identify solutions to improve the efficiency and effectiveness of their operations and business processes. Over to you, Mark.
Yeah, thanks, Simon, and good morning, everyone. Thanks for the opportunity. And you might think of the internal auditor as the poor cousin when we've heard about the insights from my colleagues in regards to cyber and forensics. But I think it's fair to say that as the internal auditor in the organisation, we have a very important role to play, and probably more so as we've seen post-Royal Commission in regards to the important role that internal audit has played and will continue to play into the future. We mentioned the Royal Commission a number of times, and I'm sure for many of you, sorry, it sounds like you would have, I'm sure you've heard that a lot of times over the years subsequently, but I think it was very interesting in terms of the outcome of the inquiry into the CBA in regards to the important role of that internal audit plays. And in that case, unfortunately, we saw a number of instances where the work of internal audit and reports of internal audit were simply ignored. And we've seen that in other organizations as well, unfortunately, subsequently. In response to that, I'm sure as a sector, you would have seen that the Institute of Internal Auditors has pulled together an internal audit better practices guide for financial services in Australia. That's a good read. If you haven't already sort of focused your attention on that, that's something we can share afterwards. But I think what it actually helps do is sets out what we see an organisation should see as the expectations of internal audit. So boards, audit committees, regulators, etc. They can be clear in terms of the expectation of the internal audit function, be that one that's provided in-house in a co-source arrangement or outsourced. And the guide, it's been prepared with reference to the International Professional Practice Framework for in the professional practices of internal auditing, which for those of you in this space, I'm sure you'd be very, very familiar with. What it does, and I think it's really helpful, and certainly in the conversations that we've had with our clients of re-establishing the importance of internal audit, it's actually set out a number of principles that should be considered. And of course, the guide is not mandatory. It is prescribing some practices that are recommended that organizations adopt. And there are 6 principles, as I mentioned. The first is around positioning internal audit for success, and I guess that's making sure that internal audit actually is sitting in the appropriate place in the organisation, and it is actually assisting the board and management in the protection of assets and its reputation and sustainability. And of course, we're seeing that focus on sustainability increasingly so in terms of programs of internal audit work. One thing that really pleased me in regards to the guide and is the focus around ensuring that there's adequate resourcing of internal audit and also adequate seniority in terms of where it sits in the organization. The other aspects or the other principles in here are very much focused around ensuring that audits are delivered to add value. And as someone has been in the profession for 26 years, I think Simon mentioned, which seems like an awful long time, but what I do see is the great value that we provide as an internal audit function to an organisation, particularly where we're looking at such a variety of subject matter. If we think about those topics that we've already heard from my colleagues this morning, internal audit plays a significant role in providing assurance to the business across a number of those areas, and we certainly work together with our colleagues in those areas to provide that additional level of assurance. One area that's been mentioned a number of times throughout the webinar this morning was in regards to the importance of culture, and Principle 6 of the Better Practice Guide actually focuses on adopting appropriate methodologies for auditing risk culture. And as an independent function, internal audit can play a really key role in providing independent assurance over the governance processes around culture and risk culture more specifically, and reporting, but also then providing an independent view on risk culture of your organization. I think we play a key role there in reviewing from a framework perspective, but also in regards to assessing risk culture through, I guess, what we call the business as usual audits that are undertaken as part of an internal audit program. I think in addition, in terms of the areas that are topical from an internal audit perspective within the industry that we've seen, and Ross has given a great insight into cybersecurity, and we certainly work hand in hand with Ross and his team in regards to that focus around maturity of cybersecurity arrangements. Other areas that are pertinent in terms of internal audit activity at the moment, certainly revisiting around responses to the pandemic and business continuity planning, and any lessons learned for organizations as we start to return to the office, sometimes being referred to as return to work, but I'm sure we've all been working really hard over this time, just not at the office. The other areas of focus also have now heightened focus in regards to the environmental, social, and governance aspects, and how internal audit is incorporating reviews of that nature into the plan. So certainly for your businesses, if those aren't featuring in terms of activity currently, that's something that certainly to have a conversation with your in-house teams or your providers in that area. And last but not least, I don't think this will ever go away, but the focus around work health and safety, but with a particular focus around psychological injuries and I guess the impact of the pandemic on people's mental health. And certainly we've had a number of clients ask us to review the response to that from an internal audit perspective, and any lessons learned for the organization, again, that can apply for the future. Simon, I think in terms of our role as internal auditors, as I alluded to at the outset, we play a really key role. I think we're a really important assurance function, and I think the revisit of what was the 3 lines of defense into the 3 lines model has also helped bolster, I think, our role as internal auditors and the objective assurance that we actually provide. So I think we've got a key role to play in the sector going forward and supporting the industry in that space. That's probably all from me, and I think we might be ready for some questions.
Thanks, Mark. Really interesting trending areas for internal audit to focus. Thank you. So yes, we have about 10 minutes left to take any questions from the audience. I'm not seeing any questions in the chat box, but Maddie, what would be the process of taking any questions?
Yeah, we haven't had any come through from the audience just yet.
But if they would like to just verbally ask the question, do they unmute?
Attendees cannot be unmuted.
I see. Okay. Thank you. All right. So have a think about some questions, put in the text box. But in the meantime, I might ask some questions from the panelists. So Ross, given you went first, so in terms of takeaway for the day, what are some of the basics that organizations should be doing to manage cyber risk? Your 6 questions were really good, but if you can just summarize what organizations can do as a basic. Might just need to unmute.
Thank you. Sorry, I was muted and I couldn't unmute myself. That's all good. What are some of the basic? Look, I think my, it's a good opportunity for me to reiterate my six kind of questions. Right, it's a really hard risk to manage if you've not got that understanding. It's really fundamental to get that understanding. And I think when I mentioned the traditional perimeter is not there anymore. Again, your data now is likely going to be with a third party or accessed by a third party, and I think the third party risk is a big one, and we've seen that play out more and more in the real world. And I think when you think about your third parties, it's then who are they working with? Who's the fourth and the fifth party, and how do you get comfort over those guys as well? So I think it's doing the fundamental stuff right and doing it well, and having the plan to get better over time. This is it's not just a switch you can flip or a silver bullet to fix everything. I think it's having that plan and really getting the buy-in as well and the support. I see a lot of organizations who spend a lot of money to improve their controls and then stop. Right, and I think to Quinn's point, this is you've got to keep moving with this thing. You've got to keep reevaluating it. Your risk today might be very different in a year's time. So I think it's a continual process. And look, from a cyber perspective, it's a business risk. It's not a fancy risk that like people think. It's a business risk. If you have a cyber attack, your business could go down, right? And that's the fundamental thing. You want to keep your business going. So it should be high up on your risk agenda.
Okay, thanks, Ross. I think our audience would love to have a slide of those 6 questions. I know I would. So if that can be shared, that would be great.
Sure.
So moving over to Adam, I know you had to rush through the last few slides, and one of the important topics was AML. So I might just give you a chance to elaborate on that. What do you see as the challenges for financial institutions in the AML space in 2022?
Do you hear me?
Yes.
Okay, great. I guess I'll answer that by reference to what AUSTRAC is seeing. I don't like to veer too far away from what the regulator's seeing, because they see far more than what we do, and I think it's important to listen to the regulator, and AUSTRAC are wholly effective in doing that. So the whole issue around data lineage is an ongoing issue and will be an ongoing issue. Common theme around not only our clients but reporting entities more broadly, I think, is that concept of data lineage. So which starts from basically an understanding of the data being collected at onboarding, so customer or client onboarding, and how this information feeds into customer risk assessments, another big area, and other AML or money laundering functions, anti-money laundering functions in the business, such as the important transaction monitoring. We see a lot of entities trying to improve their data, particularly enhance their understanding of customer in the area, particularly around customer risk. I guess clients need to understand, or businesses need to understand, that how a piece of technology will address their AML risks as well. Often it's a matter of going to third-party vendors and it's off the shelf and it just doesn't work. It doesn't add any value to their control environment, costs a lot of money. So data lineage is very important, and I think that should be an emphasis in the AML space, and that is what AUSTRAC audit when they come in.
Okay, thanks, Adam. Next is Quinn. Given that we noticed that some of the participants today are from the finance function and from the IT functions, how essential is collaboration between the finance and IT functions in the prevention, detection, and response of fraud?
Yeah, absolutely essential. And we don't see it happen all the time. Quite often risk registers are maintained in isolation. And that's not the 2021 or 2022 way to go about things. So really important to have cross-functional working groups. And obviously now the trick is to do that without boiling the ocean and without creating, sort of 3-hour-long sessions that take the business away from their BAU. So that is really a form of art, in my opinion. And then I think one of the most important things which could be improved on, what I see, is sitting down together, finance, IT, and any other organizational area that was involved in any kind of incident, whether it's a straight on financial fraud, like someone actually managed to defraud the organization out of a few hundreds of thousands of dollars or any amount, or whether it's more in the cyber area, either a malicious insider or they were actually attacked from the outside and potentially some information was exfiltrated. I think sitting down and actually really understanding the root cause, learning from it, and then improving the fraud risk management more broadly, which now has the tentacles or the links into cyber, that is often the missing piece. Like incidents are brushed over too quickly and lessons aren't learned. And then, you know, a few months later, a very similar thing reoccurs and everyone's kind of looking at each other. And yeah, I think the key to do that properly is to have key organizational functions like finance and IT in the room all together, and digging a bit deeper than the surface level. So absolutely pivotal in every stage.
Very good. Thanks, Quinn. And Mark, finally, given the subject matter of our webinar today and in the spirit of bringing it all together, how would internal audit work with cyber and forensics experts to add value and greater insights to an internal audit function?
Well, I certainly encourage it, Simon, to start with. I mean, I think we certainly see great value for our clients in actually working together, and you know, internal audit is a great I guess avenue, I suppose, into the organization and understanding what its key risks are and ensuring that we actually engage with our cyber experts and forensic experts in providing additional assurance to our clients in these spaces. If I think about internal audit plans, you know, one thing I've certainly seen sort of post pandemic, I mean, cyber, I think is here to stay, Ross, for some time in terms of its focus. What I've seen is just a shift in terms of the frequency of its focus. So, you know, it might have been something that would have been part of an internal audit plan, and it would have been a focus maybe once annually. You know, we're now seeing organizations wanting to do multiple assessments of its cybersecurity, either maturity or posture, throughout the year. So I think we play an important role there. Simon, in terms of, you know, how we work with the audit and risk committees, with the board in regards to internal audit activity. But I think the same is true also for, you know, fraud risk and fraud and corruption risk assessments. It's great because I think it's been some time since internal audit plans have had that focus, but certainly, again, I think whether it's a consequence of the pandemic, perhaps, or the AICD maybe doing a great job in terms of, you know, where boards are focusing their effort, but, you know, fraud and corruption control is very much there. And so, you know, if we were to be asked to conduct an internal audit in that space, I think it would be remiss of us not to engage our expert colleagues to conduct audits in that space. And I'd certainly encourage teams within our clients to consider the same and using, you know, relevant subject matter experts in the delivery of those internal audits.
Okay, thanks, Mark. Well, that brings us to the end of our session today. I'd like to truly thank everyone for participating today and for giving us your precious time. Thank you to my colleagues too for sharing your great insights. We hope today's event has given you some key takeaways for you to consider and perhaps implement in your respective organizations. We certainly enjoy connecting or reconnecting with you all, and hopefully we triggered your interest in our rapidly growing risk advisory services, particularly in the financial services sector. As mentioned, this was the first series of financial forums we intend to have throughout the year. We look forward to seeing you again in not too distant future, hopefully in an in-person event in our Sydney office. But finally, before we close the session, we would appreciate if you fill out a short feedback survey that will launch once we close the webinar to help us improve our future webinars. Have a great rest of the day. Thank you.